Biggest news ever. Coinbase has asked a judge to scrap the US Securities and Exchange Commission lawsuit against the cryptocurrency exchange. In a federal filing, it stated that the SEC's claims must be dismissed because the subject matter falls outside the agency's delegated authority. Wait a minute, how did we get here? June launched most crypto exchanges and cryptocurrencies into a bloodbath. So many things did not just seem right, and the SEC was bent on carrying out its duties. Early June, the SEC alleged that since 2019, Coinbase has engaging in an unregistered securities offering through its staking as a service program, which enables customers to earn profits from the proof-of-stake mechanisms of certain blockchains and Coinbase efforts. Then, through this staking program, Coinbase allegedly pulled each type of customer's stakeable crypto assets, performed blockchain transaction validation services, and provided a portion of the rewards generated from this work to its customers whose assets were a part of the pool. So Coinbase failed to register its offers and sales of the staking program as required by law. The SEC Chair Gary Gensler said, "We allege that Coinbase, despite being subject to securities laws, commingled and unlawfully offered exchange, broker-dealer, and clearinghouse functions. In other parts of our securities markets, these functions are separate." Coinbase's alleged failures deprive investors of critical protections, including rulebooks that prevent fraud and manipulation, proper disclosure, safeguards against conflict of interest, and routine inspection by the SEC. Furthermore, as we allege, Coinbase never registered its staking as a service program as required by the securities laws, again depriving investors of critical disclosure and other protections. Another allegation about Coinbase ignoring the rules because it didn't like them or being it preferred different ones was made. Gerber S. Grewal, the director of the SEC's Division of Enforcement, added this to the claim, saying, "As alleged in our complaint, Coinbase was fully aware of the applicability of the federal securities laws to its business activities, but deliberately refused to follow them. While Coinbase's decisions may have allowed it to earn billions, it's done so at the expense of investors by depriving them of the protections to which they are entitled. Today's actions seek to hold Coinbase accountable for its choices." This was not an easy period for Coinbase, plus the claims were too hefty to be ignored. Losses were incurred and the whole situation was a mess. So how did Coinbase react to these allegations? In a blog post, Coinbase wrote, "Today we are disappointed to share that the SEC gave us a Wells notice regarding an unspecified portion of our listed digital assets, our staking service Coinbase Earn, Coinbase Prime, and Coinbase Wallet after a cursory investigation." A Wells notice is the way the SEC staff tells a company that they are recommending that the SEC take enforcement action for possible violation of securities laws, and it is not a formal charge or lawsuit, but can lead to one. Coinbase further wrote, "Today's Wells notice does not provide a lot of information for us to respond to. The SEC staff told us that they have identified potential violation of securities laws, but little more. We asked the SEC specifically to identify which asset on our platform they believe may be securities, and they declined to do so." Today's Wells notice also comes after Coinbase provided multiple proposals to the SEC about registration for months, all of which the SEC ultimately refused to respond to. The crypto exchange concluded the post by explaining that even though it didn't take the development lightly, it is very confident in the way the business is run. It is the same business that was presented to the SEC to become a public company in 2021. Where did it go wrong? According to Coinbase, there is a need to ensure that rulemaking and legislation are better tools for defining laws for the industry than enforcement action. But if necessary, Coinbase noted that it is open to the opportunity to get clarity in court. Well, this opportunity came late since so many things have been affected negatively already. After labeling Coinbase as a securities exchange, the US Securities and Exchange Commission asked the exchange to hold trading in all cryptocurrencies other than Bitcoin before suing it, perhaps to indicate the agency's intention to assert regulatory authority over a broader slice of the market. Coinbase Chief Executive Brian Armstrong noted that the SEC made the recommendation before launching legal action against NASDAQ-listed companies last month for failing to register as a broker. Let's not forget that the SEC's case identified 13 most lightly traded cryptocurrency on Coinbase's platform as securities, asserting that by offering them to customers, the exchange fell under the regulatory's remit. Cardano ADA was included. The request for Coinbase to delist every one of more than 200 tokens it offers, except for flagship token Bitcoin, suggested that the SEC, under Chair Gary Gensler, has pushed for wider authority over the crypto industry, and they are not backing down anytime soon. Brian Armstrong said, "They came back to us, and they said we believe every asset other than Bitcoin a security. And we said, well, how are you coming to that conclusion? Because that's not our interpretation of the law. And they said, we're not going to explain it to you. You need to delist every asset other than Bitcoin. If Coinbase had agreed, that could have set a precedent that would have left a vast majority of American crypto businesses operating outside the law unless they registered with the commission. He added, we didn't have a choice at that point. Delisting every asset other than Bitcoin, which by the way is not what the law says, would have essentially meant the end of the crypto industry in the US. It kind of made it an easy choice. Let's go to court and find out what the court says. Remember that the SEC chair Gary Gensler has previously said he believes most cryptocurrencies, except Bitcoin, are securities. The recommendation to Coinbase reinforces the fact that the SEC has adopted this interpretation in an attempt to regulate the entire industry. Well, this is more than the tone Vase issue the Cardano founder had with former MicroStrategy CEO last year. However, Ether, the second largest cryptocurrency, which is fundamental to many industry projects, was absent from the regulator's case against the exchange. It also did not feature in the list in the 12 crypto asset securities specified in the SEC's lawsuit against Binance. ADA was not lucky enough. But the SEC said its enforcement division did not make formal requests for companies to delist crypto assets. Well, now that Coinbase is taking this issue to court, there could be further clarity and new decisions might be made. The recent events in the crypto industry may have triggered this more. XRP's partial victory is one of them. In a landmark ruling, the SEC dismissed its lawsuit against Ripple, the company behind XRP cryptocurrency, and declared that XRP is not a security asset. This means that XRP can continue to operate as a digital currency without being subject to the same regulations and restrictions as securities, such as stocks and bonds. The SEC had accused Ripple of selling unregistered securities worth $1.3 billion through its XRP token sales since 2013. Ripple argued that XRP was a medium of exchange and a utility token, not an investment contract that gave investors a stake in the company. But the case hinged on whether XRP met the criteria of the Howey test, a legal framework that determines whether an asset is a security or not. Plus, crypto capital venture founder and popular crypto analyst Dan Garbadello recently talked about Indonesia's recently released list of crypto assets labeled as commodity tokens under Indonesian laws. He noted that it was going to bring very big support for the Cardano ADA as it was easily secured the label of commodity asset in Indonesia. ADA being labeled as a commodity in a completely different place was indeed thrilling. Perhaps Coinbase considered these factors and decided to up its game by deciding to take the case to court. Now, Coinbase is arguing that none of the digital assets and services it offers do not qualify as securities, because as a matter of law, none of them, digital assets, are. The claims must be dismissed, the filing said. Also, Coinbase Chief Legal Officer Paul Grewal tweeted that the core argument is simple: we do not offer investment contracts, as that term has been construed by decades of Supreme Court and other binding precedent. He continued, by ignoring that precedent, the SEC has violated due process, abused its discretion, and abandoned its own earlier interpretation of the securities law. Coinbase is not the only victim of the SEC's rage. This year, the regulator has intensified its crackdown on the cryptocurrency industry. This is largely in part because its chairman Gary Gensler claims that many major crypto brands, mostly exchanges, are selling unregistered securities. Under his watch, the regulator sued Kraken, went after Binance and its sister company Binance US, and hit Genesis with a lawsuit. This is the point where we say, enough is enough. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.